So everyone's been watching Iran. 12 weeks of missiles, mines, Trump tweets at midnight, and the actual supply shock of 2026 has been quietly happening in a Chinese city most people can't pronounce.
Hefe!
Hefei, ChangXin Memory, posted 719% revenue growth, and they just started shipping DRAM into Corsair memory sticks sold across Europe.
Wait, Corsair? The gamer brand?
That Corsair, which means the 20-year Samsung-Hynix-Micron memory cartel, the one quietly inflating the price of every server, every laptop, every gaming rig you own, that cartel just got its first real competitor outside the club.
Okay, but here's what I love about this. Everyone's pricing hyperscalers, Meta, Microsoft, the whole AI capex story, as if memory pricing stays expensive forever.
Right. That's the assumption baked into every model.
So if Chinese DDR5 floods the market at half price, the AI buyers actually win. Their margins fatten. The losers are the cartel itself. Korea Incorporated takes the bullet.
And Korea is already wobbling. The one is flirting with 30-year lows, the Japanese yen, 35-year lows. Rupiah, rupee, all-time lows.
That's where currency crises start, always at the periphery.
Now, while everyone was reading the Iran missile updates, Trump buried something much wilder in his Memorial Day post.
Which I missed, by the way.
Most people did. He's pushing Saudi Arabia, Qatar, Pakistan, Egypt, Jordan, all into the Abraham Accords. And then he invited Iran to join too.
Iran, in the Abraham Accords.
45 years of regional hostility, repackaged into one document.
That's either genius or completely delusional.
Probably both. But markets are pricing the Iran headline. Nobody is pricing the actual diplomatic earthquake.
And quietly funding all of it? Japan?
Japan, which everyone says has debt to GDP of 226%.
Highest in the world. Famous number.
Famous and completely misread. Strip out the foreign assets the Japanese government complex hoards, U.S. treasuries, equities, FX reserves, and net debt drops to 77%. Lower than the UK, lower than the US.
So Japan isn't broke. Japan is running a giant carry trade with a flag on it.
Borrowing cheaply in yen, lending expensively in dollars, the planet's biggest hedge fund disguised as a pension system. As long as the yen keeps sliding, Tokyo keeps winning.
And the day it stops sliding?
Everyone's carry trade ends at once.
Quick check on positioning, because this part is wild.
Go.
Macro shorts on Goldman's prime book just hit a 10-year high. AAII bearish sentiment is back to March low levels, even though indices are 20% higher. Hedge fund nets sit in the 26th percentile.
Translation: nobody believes this rally. Everyone keeps getting run over by it.
That asymmetry alone keeps the melt-up alive. Squeeze fuel until positioning normalizes.
And there's a calendar reason for that. AI is now roughly 48% of total U.S. market cap once you fold in SpaceX and OpenAI.
SpaceX lists June 12th. OpenAI is targeting September.
Only the 1880s railroad bubble ever ran higher, 63%.
Uncomfortable math. But here's the trade insight. Investment banks have billions in IPO fees on the line. They will not let this tape crash before they collect.
Trim into strength. Do not exit.
One more theme worth flagging. GLP-1.
Lilly's Rita TrueTide phase. 2 data showed over 30% body weight loss. Surgery-level results from a pill.
And the survey work is what gets me. Users permanently cut restaurant visits, takeout, alcohol, snacking. The habits stick even after they stop the drug.
Cuervo down 70% over 5 years. Diageo collapsing. Equal weight restaurants getting punished. This is structural margin destruction, not a fad.
So what do we actually do with all this?
Trim the crowded AI longs into strength. Use the rich inverted call skew, which is at meme mania levels, to finance downside protection. Collars are cheap right now. Keep dry powder for the post-IPO unwind.
And pair the long equity book with short global bonds. If real yields keep climbing, the bond short pays for the equity volatility.
That's the tape.
This week's Tuesday target on the options side, NVIDIA. Clean technical retrace after the multi-month breakout, attractive valuation versus its own 5-year history, and the memory shock we just talked about lowers a key input cost. A July expiry call butterfly that profits from a measured grind higher.
Risk defined, positive theta. The full structure and reasoning is in the letter.
Thanks for listening. See you next Tuesday.
Or Wednesday. You know how it goes.